in Kenya, how many $1 billion revenue businesses do we have?
I don't know about Safaricom. Yes.
Right. How many do we have in East Africa? 15.
In East Africa.
$1 billion revenue businesses in East Africa. Mm-hmm. So so you can see where I'm going with this.
Yes.
California State, yeah, the GDP of California State is bigger than the GDP of 54 countries, Africa.
One state.
Yes.
One state of California is bigger than the whole Africa.
Yes.
Okay.
So if Safaricom was in California,
it's a kiosk.
Cottage industry.
Hey, wadau maze, just when you think you've learned so much about money, Peter Nduati comes along.
The business is growing. Me pesa yangu ni mshahara na ile savings, because this $3 million wasn't coming to me. It is an investment direct into the company. So I'm not selling.
It's not like 300 million. At sasa you do what you
I like
want.
The way you just rounded up 300 million. Let's work with 300 million.
Yes, let's work with that.
So it's not 300 million to me, even though I'm the founder of the business. It is 300 million into the company.
Peter Nduati is an eclectic entrepreneur and the founder of Peter Nduati Consulting. And on this episode, you get to watch Peter Nduati Consulting.
That's why strategy is never 100%.
And the alcohol is just an example, Ama.
I'm giving you as an example.
This is a standard for all business, because for alcohol, you could say that's the work of Jesus. Sio kawaida kulinyesha.
Yes.
So in terms of these patterns and seasons,
yes,
you cannot, like, the business environment in Kenya cannot allow you to plan long term.
You used to be able to, but there's always a disruption.
Hey, wadau maze, how do you make $1 billion and you still continue working?
I go through many times as an entrepreneur where I have no money at all. No money.
But your company has money.
The companies are trading and they have money.
So you'd go low on fuel. Hauna pesa ya kuweka mafuta.
Yes.
But your company has 400 million.
Yes.
How? Why?
Because the company is not your wallet and you do not work in the company. So the businesses I am in, there's some businesses where I sit on the board. And what do you think board members get a lot of money?
It is my idea. I am the reason you are all here.
Okay. Yes.
I sat down, I put together this idea,
yes,
and nini. There's 400 million there na gari yangu haina mafuta.
Think about it this way.
I'm your host, Dr. Kingori, and here's another reason to stay subscribed to our channel. Kama hauja subscribe, this right here is another reason to hit subscribe and turn on the notifications bell. Wadau, a quick word kabla tuanze show. Leo allow me to plug you to your ultimate partner in your entire production cycle. That's the Odoo MRP. And I know what you're thinking. Juzi tu hapa, I was telling you about the Odoo point of sale. Tumefika kwa manufacturing lini? Well, let's rewind kidogo. Tuanze na basics. Odoo ni nini? Odoo is a powerful all-in-one platform with a full suite of business applications, whether you are running a kiosk ama shop pale kwa mtaa or a fully fledged manufacturing company. Odoo has got your back. Now, when I say Odoo has all the apps you need to run your business, I mean exactly that. Ikuwe ni HR, ikuwe ni accounting, ikuwe ni sales management, stock management, project management, you name it, Odoo has it. Now let's talk manufacturing. Enter the Odoo MRP. That is the Manufacturing Resource Planning. Now with the Odoo MRP, you can manage multiple work centers where different processes happen, all while having a bird's eye view of all your operations. Imagine having one platform where you can oversee all processes from orders to production timelines. And even better, the Odoo MRP allows multiple teams to collaborate in real time and from different devices. Ikwe monitor, tablet, ama smartphone, you name it. Basically, different departments can work on various stages of production at the same time, saving you time, money, and energy. Na bado kuna more good vibes. The first application you choose on Odoo is free for life, and that includes hosting and support. Now, as your business grows, you can add more apps, and this you get at a very affordable price. Alafu tukuwe honest, for those in manufacturing, this one you may need an expert to take you through it. But guess what? You can book a free meeting with an Odoo expert at a time and date of your choosing, akupeleke step by step on how to streamline your manufacturing. Tumia hii link tumekuwekea kwa description ya hii video and get started today. Lainisha biashara yako na Odoo, link ndio iko hapa down.
Akon said something that really stuck with me. He was in an interview, akasema, ati, nowadays, I don't remember the exact figure, ati 10 million songs are being produced every minute or every 10 minutes, right? What are
Possible.
your chances? What are your chances of producing a hit in that?
It's difficult. There are 5 million artists on Apple Music. I have music on Apple Music. When will I get 10 million streams? It will be very difficult. Because my song was targeted at Kenyans. How many do you think have 10 million Kenyans out of 54 million who pay for Apple Music? And if they do, they listen, but they don't buy.
I'd be surprised to have 100,000 Kenyans on Apple Music.
In Kenya, who is the most streamed artist today? Do you know? Most streams. I want to test you.
No,
Anyone know here who is the most streamed Kenyan artist?
BN. Should be BN.
No, it's not BN. Anyone? Sophia Nzao. She's the most streamed Kenyan artist. You know the girl of Mwaki. She's the most streamed Kenyan artist. Then BN is number 2. And how many songs does she have? 2. Now, look at how Sophia Nzao ended up getting. See, it was a random Brazilian DJ who did a beat. And then she had her vocals, I think, on SoundCloud. The guy mixed it. They had never met. And now she's touring the world. She's the most streamed Kenyan artist, then followed by BN. And the gap is huge. The gap must be in the millions.
So that is nothing to do with, now that is positioning, right? Being at the right place at the right time. Okay?
Yes, your ducks are in a row. You didn't do anything, right? Your ducks were just in a row like this. Your ducks have to be in a row.
That's what it's called.
You create your own duck.
Please explain that, kidogo.
Okay. Because you know what ducks being in a row means? When batters,
Yes.
Yes. So sometimes even in business, you can do everything right and things don't work because your ducks are not in a row. So you need to create your own luck. And that's exactly what happens to her.
So Akuna Chati, you went to music school. It is you who knows music more than the others. It is CG quality. You use a microphone, you're 1 million.
The best music, as I said earlier, in Kenya is the music you have never heard of artists you never heard of. Those guys on SoundCloud and all that. That's the best music in Kenya. Sometimes it's luck. Okay, let me give you an example. Kaveve Kazoze. You know she released a lot of other songs after that. Do you even know her?
I know Kaveve Kazoze.
She's gone back to selling, to thrift. She's selling clothes back in the streets.
Were in a row.
The ducks were in a row for that canvas.
For the cash crops.
But she did not, her team did not construct it properly. And that's music. Her ducks were not in a row. Moja ilikuwa imeenda combo. And that's it. Steve Simpleboy, how come you know Steve Simpleboy before he became a comedian? He released one song.
Yes.
I mean, Omihadarati.
And people, he became famous out of mockery.
People were laughing at him.
Yes.
And look at him. He has pivoted well. He has an audience who have found him and they have supported him. So that's the issue with music.
Then what's the place for someone who's pursuing music as a career? They're looking at one of my favorite peoples, like Juakali. They're looking at Juakali.
Yes.
You want to have the success Juakali had. But most of the people who were in season with Juakali did not even enjoy the success Juakali enjoyed.
They did not, yeah.
Nameless, I think he's a smart guy, just leveraging in terms of performances and nini.
Correct.
But not most people have enjoyed musical success by they beyond Juakali and Nameless.
Correct.
Beyond Juakali.
And we are all of that generation. So I'll answer this question the way my parents told me. So I wanted to do music. That's what I knew would take me to where I want to go. My parents told me, go to business school first. Music haiendi pahali. Then you have a backup. In case music doesn't work, then you can earn through other things. You get? It was the best advice I ever received. Because even today, even though I do music, I can't live on music.
No, but someone would counter that because motivational speakers and people who've made it, they say you choose a path and you focus on it and hammer till it works.
I'm a contrarian. I don't agree. I do not agree. There's a time and season for everything. What I do today, if I started what I do today 30 years ago, I would never have survived. I would never have made money. These seasons in life. There is seasons in life.
So I think we should start with, how do you identify seasons? Given the example you've given, your parents told you music is not going anywhere.
Yes.
Right? How do you identify what is relevant and when it's relevant?
You just have to keep your ear on the ground. You talk to people. You position yourself. You go to... I always tell people, go to where your audience are.
Ground.
Let me tell you a story. I was the first CEO on Facebook in Kenya.
First CEO on
First CEO. And you know, people used to ask me, why would you be on Facebook? Okay? First of all, I need to tell you, how did I find Facebook? I was watching Oprah. Oprah was a show we used to watch in the evening when you get home.
Yes.
And Oprah spoke about Facebook, how it was discovered by a guy who was in Harvard, and because there was no social media. They had tried something called MySpace, and I was on MySpace. And I'm not talking a long time ago.
Between 2006 to 2009.
Up, 2008, 2007.
Yes.
Nation Media Group came to my office to interview me why I'm on Facebook. And you can Google the story. And I told them, I am where my future audience is. Okay? And the only brand that I can tell you that has cracked this, is Coke. Coke targets someone very, very early. Coca-Cola, if you notice, they will not target children because it's illegal, okay? But they'll make sure that most people who consume their drinks is a child. So they position themselves to be visible on places where kids can see, right? That is positioning yourself where your future audience is. So I embraced social media then because I knew that my future is in it. You have to use the tools. Now, digital marketing is not anything we'd ever have thought about. You can put an ad on Facebook. Facebook came first, then Twitter. That you can put an ad. Okay. Right now, any brand what is sold doesn't buy legacy media. They're buying around your space. They're about digital space. It's the same thing. If you want to know the direction things are going, you need to be on the ground. I went for Gemi 3 in Limuru. And when I came back, I sat with my guys and I told them, this is the time we need to release Kikuyu music. Because the person who is going for Ngemi, right now, it's upper middle class. Okay? You know, vernacular music initially used to be listened to the guys in shags. Okay?
And there are memes about Kienyeji guys listening.
Exactly. Yes. Yeah, as we call them. That's a very derogatory name. Kienyeji. So it's the same thing. That's how I view life. Yeah. I was reading an article recently that 80% of the jobs we are doing now won't exist in 2030. 5 years from now.
5 years from
Think about even what we are doing today.
Yes.
In 2030 would have changed.
Yes.
Right?
True.
Maybe we'll be tapping here to speak because the mobile phones would have been maybe a chip. But you do not wait 2030 to prepare yourself. You know, if you're not planning for Gen Alpha, you're going to fail. Now, yes. So right now, and I don't like politics, and I don't want this to be ran. If the current president, if he's going to live, to be Gen Z, we're going to remove him. It's not us, guys, in our 50s. It's Gen Z. Because although he did very, very, very well with churches and everything, he targeted people who don't go to church. He ignored people who don't go to church. And that's the reason why, if he goes to one term, it will be because he didn't listen to Gen Z. Okay. 2032, Gen Alphas will be 20 years old. Yeah? They're the ones going to vote. Now, today, Gen Alpha are not listening to your podcast or mine.
True.
We need to start thinking, how are we going to reach them? Visit them. They're in school. They're around us. They're your nephews, your cousins. And don't rubbish the things they are doing. I remember again when I used to live in Tanzania. You know, in Tanzania, the Kinondoni, where the top hotels are. If you go there on a Sunday, on every corner, there are people taking photos. In our time, it was for Instagram. You know, Tanzanians grew on Instagram. Even their gossip was on Instagram. Okay. The same way that if you went around malls 2-3 years ago, you always find people in the street shooting TikTok videos. Okay? Who did you ever think, even 3 years ago, if you told me that, I mean, even during COVID when TikTok came, that one day there'll be ads running on TikTok? No. Right now, they're TikTok experts. How do you become an expert for an app that started recently? But there are people who are surviving on it. And that's what happened to legacy media. You have bigger audience than legacy media. So that's, in business, you have to listen.
So when you say, and I'm inclined to agree with you on that, in 5 years, 80% of the jobs will not exist.
Yes.
So first of all, you're saying the concept of anyone working now,
yes,
planning for a retirement in the traditional sense,
forget about it.
It's obsolete.
It's gone.
Ati wakinifuta kazi ama
ati nitaenda ushagoni, I become a farmer.
It's a lie.
First of all, successful farmers will be digitech. It will not be your traditional tilling. Because your audience, every buyer right now is on the digital space.
Okay.
All right?
Yes.
For almost everything. I don't like rubbishing Twiga because I think they did it wrong. Yeah. Because I still don't know what they were trying to fix. Uber for bananas, not yet. Twiga, well, that's what they branded themselves as Twiga. Uber for bananas did not work. But I still believe the digital space and digital and agriculture is definitely going to come in.
Bananas couldn't work in Banana Republic. I saw something. I saw something about Twiga having a lot of money. Like they had billions. I can't remember the exact.
They raised $180 billion. So that's $1 million so far. They've raised that. Do that with 130. So
it's in the hundreds of billions.
It's over 10 B. It's over 20 B actually.
So what this says, as someone who's as a seasoned entrepreneur, inamaanisha, first of all, we remove capital from the table as an ingredient for success in business.
Yes.
Where does that leave us now? Then what determines the success of a business? Your data that you're saying?
So first of all, I always advise people, think with the end in mind, right? This business you are doing, is it possible for it to be $1 billion business?
$1 billion.
That's the number that I normally think about.
Scalability.
Yes.
Okay.
Can you scale it to that level that you're making $1 billion? If no, then you need to pivot it to ensure that it can get there. Or you just agree, cottage industry, and that's okay. Because it depends on your risk appetite. I have a business partner who will kill me. I have a business partner who 7 years ago wanted to scale. And I sat with him and I told him, listen, we need to raise money to scale this business because we need to make it number one in Kenya. And a week later, he came to my office, he told me, I want to talk to you. He sat down. He told me, I don't want to live your life. You're always chasing the next big deal. You're always raising capital, traveling. I want to run a business where I'm settled in Nairobi, I'm taking care of my children and my wife. So as long as this business beats inflation, yeah, okay? It's beating inflation.
Okay.
Okay?
Yes.
That's my growth target. Okay. Don't tell me to go to scale to Uganda, Tanzania, open a new brand. No. And he still runs a business. So remember now, you see now his risk appetite is lower. Okay. Will that business be $1 billion business? Absolutely not. Okay. But he's comfortable with that. Now, in Kenya, how many $1 billion revenue businesses do we have?
I don't know about Safaricom.
Safaricom.
Yes.
Safaricom. How many do we have in East Africa? 15.
In East Africa.
$1 billion revenue businesses in East Africa. So and so you can see where I'm going with this.
Yes.
California State, yeah, the GDP of California State is bigger than the GDP of 54 countries, Africa. State
One state.
Yes.
One state of California is bigger than the whole Africa.
Yes.
Okay.
So if Safaricom was in California,
it's a kiosk.
Cottage industry. So you understand. So it depends on the risk appetite of you as an entrepreneur and how you want to grow, right? So coming back to my story, if today you can find a way to conquer Gen Alpha, because you're fairly young. Okay. When you're in your 50s, you'll be a multi-billionaire, and majority of billionaires are in their 50s.
When you start today.
Yes. If you can conquer, find a solution of what would Gen Alpha will be consuming. Now, you start designing and getting ready for that new consumer. Because the world is about consumption. Then you'll knock the world. If you design a product for me, you're going to be broke for a long time. We are free.
So I need to start working on a Cocomelon podcast.
Exactly. Surprised you know Cocomelon. We have young kids.
I know Cocomelon.
Yeah, so that's where we are going. And where are these kids? Most of these kids are online now. In fact, most schools right now, they have tablets for kids.
Yes.
I saw email. I remember my first employer getting an email. It used to be in the MD's room, the PA. Yeah. So emails used to be printed and brought to us. Okay. And just before the .com phase. What I know now, if I was to go back, 1992.
Yes.
My goodness, I'd have set up an ISP.
Okay.
You see?
Yes.
And it would have been a $1 billion business, easily. So the knowledge is usually around us. We just do not find it. And so what I've done as an entrepreneur is keep testing myself.
Okay.
Have I failed? Oh yeah, a couple of times. But I wake up, I dust myself up. Yeah. So the fear of failure is not something that I worry about.
Okay.
No. What my fear is, the day I'll give up. I'm very afraid, because that day will come. I'm no longer have the energy I had in my 30s when I went into business. The day it will reach a point and I see I'll put it in and I say, no, I'm afraid I have given up. I can't do this anymore. That's my biggest fear. Okay. And it will come. And that's the reason I respected Chris Kirubi. Listen, he was in his 70s and he was my friend. He was in his 70s. Starting a coal. Remember there was a process that Chris Kirubi was starting digging coal in Ukambani. Yes, and he was raising money and he was telling me, I was asking him, but Chris, by the time this business is reaching where it should be, you won't even be here. He says, Peter, we do not build businesses so that we can enjoy them. At that time, he was building business for legacy. Okay? And regardless of whether you liked him or not, he has left an impact in the world. Look how many brands of his you can identify which are successful. The other thing is, for a person like that, if he went away, you don't hear fights about his wealth. The businesses are still thriving. They didn't die with him. You get? So there's a lot more you do when you're older.
Okay.
You do not walk away from opportunities because you've reached a particular age. Now, our parents, 55, oh my goodness, retired. You get a watch and a jembe and a wheelbarrow. Unaenda ushago.
I'll come back to that point of Chris. You've answered a question, but I think I'll bring it back because
No problem.
we've had a chance to have him on our show before he passed on. But there's something you say, Ati, as long as the business beats civilization.
Yeah.
I'll give you an example.
Yeah.
A friend of mine is actually coming again in one of our upcoming episodes.
Yes.
Brilliant gentleman. He gave us an example of someone from the US who had invested the equivalent of $1 million in the Kenyan market in 2020, right before COVID, okay? And this year or last year, given a return of 12%
Yes.
Per year, I think it's a so-called money market craze, okay?
MMF,
So she gets the return of 12%,
Yes.
but inflation is biting it.
It's eating it.
Yes, in fact, Robert's calculation was the Kenyan currency had devalued
Yes.
at 32%.
Indeed.
So yes, you have made 12% consistently.
Correct.
For those years, around 4 years.
Yes.
But then by the time you're getting your money, it's an
Yes.
equivalent of 600,000. So
Yes.
you think you've made money,
But-
but you've actually lost.
Correct.
So please explain to us this concept of as long as a business beats inflation.
That was not me. I mentioned somebody. But I don't believe in that. You cannot decide, especially in an area that like Kenya, and you have 2 levels of inflation. You cannot decide you're going to set up a business and your growth target is to beat inflation. Probably need to do double our growth numbers. Look at the money that comes into this country. You understand the term IRR, internal rate of return?
Internal.
IRR. Utai Google.
Yes.
They will ask, most funders in Kenya will ask you for 25% IRR.
Most funders.
Most funders
Okay.
will want an IRR. And it's not easy. An internal
So
rate
I'm
of
assuming,
return.
please allow me to assume, IRR ni if someone is investing in Kenya,
Yes.
if they give you $1 million, Bob,
Yes.
they want 25% on that $1 million, Bob.
IRR. And if they'll give you maybe over a period, they tell you 3 to 5 years. So
Yeah.
annual rate, that return of 25%.
Now we are in a country where, first of all, that is 25%, but standard market returns
Yes.
plays around 8 to 12%.
Correct.
Then you'll never make it.
So now, you may get a funder who comes and agrees on a lower rate, okay? But they are looking at exit maybe in the stock exchange. They could be able to get that yield. You get? Went through a phase in this country when our stock exchange was liquid. And in your generation, you've seen IPOs, okay? And you've seen even businesses list by introduction. It's because the way the economy was, right? People were looking for better returns. You know the reason why everybody's talking about money market funds?
Yes.
It's because it's where they're getting a yield, right?
Yes.
With low risk, because you have to balance the two. You can invest in junk bonds. I mean, if you go today to Venezuela and they release a bond,
Yes.
surely you can probably even make 60-70%. But what is the risk that government will pay you back? So
your junk bonds,
yeah,
okay.
so high risk, high
High
return.
return, yes.
Okay. And that's why Sherlocks exist.
Yes.
It's exactly why they exist. Because a bank, especially now because of NPLs, will check very, very many things. A Sherlock will not check your CRB.
Yes.
Okay? They're taking a bigger risk. But how much do they charge you? And maybe Sherlock's lend you on a per month basis, 10% per month. Yeah, okay. If you do your multiples, that's what, that's 120 per year.
Yes.
You get?
Yes.
It's the same way. There's always places you can put in money. So if you look at where we are as a country right now, our political situation, would not be attractive to sophisticated investors.
Yes.
But the investors who have high risk, and you know you make a lot of money in chaos. Oh yes.
Okay.
America is a good example. That's why they start wars.
Uh-huh.
You make money in chaos situation.
Yes.
If you plant your seed at a particular time, you'll make and yet in peacetime, look at the UK and they get 1%. In fact, places like Japan in peacetime, they can't charge you interest rates.
I've heard of negative
Interest rates. They're charging you to keep your money.
Yes.
Okay.
They are paying you to keep your money.
You. Yeah, no, you're paying them to keep your money.
Oh,
Not the other way around. So,
yes.
Because the bank requires to mop up money so they can lend.
Yes.
Yeah. But if they are lending at 1%, how much can they pay you? Okay. So there are a couple of things. There's a savings culture that is important for a country. And if you look at China, people always look at China and say, oh my goodness, they went and started removing CO2, or they are spoiling the ozone layer. But China in 1992, they looked around and thought, we have a population, okay? We just need to take advantage of the population and industrialize, okay? Innovate, okay? Do you think the current, is it a prime minister or president of China, do you think he cares about the carbon footprint, the way guys in the West are looking at it?
No, it doesn't.
He's dragging people out of poverty. Okay? So even a country like Kenya, when we start looking at, we won't do this business because it's going to increase our carbon footprint. Very good thing to do. And it's something that came with the work culture. Okay? What is our contribution to CO2 emission for this country? If we, at all, maybe 0.2%. But how many people do we have who are poor? We should bring those Chinese guys to manufacture here. Okay?
Yes.
They invest here. We manufacture. We make it easier for them to manufacture. We'll fix the ozone layer later. After all, how much is Africa producing for carbon footprint? We still have forests and all that. It's so low risk, low return. High risk, high return. But you can't set up a business to beat inflation. You need to set up a business for growth.
Set up a business for growth. Is there an end goal?
Depends on the individual. So, a lot of people start going to business. If you ask many people who quit employment and start companies, they start the companies for independence. Let me tell you something. That's a myth.
There's nothing like
there's no independence. In fact, when you go to entrepreneurship, and if you notice when I talk, I don't romanticize entrepreneurship. I say it as it is. You're always owned and controlled by somebody. I'll give you a situation. When I used to work for AR many years ago, before I went into business, and say I was sales and marketing manager, there are some things I could do and get away with it, like go to Kani and dance on a table and I'm enjoying my shot of tequila. You think I can do that today? My customers will think, this 55-year-old, is he crazy? What the hell? You are owned by the consumer. So you're either owned by the consumer or, and that's a market. Yes. They own you. And then, when I was employed, towards the end of the month, right? So I'm expecting income.
Yes.
Right?
Yes.
I can even take a week off because I'm entitled. I have leave days. I can decide I'm taking a break.
Yes.
Do you think as an entrepreneur, especially in the early stage, you can do something like that? The last weekend of the month is the worst for any entrepreneur to meet payroll, and then 9th to meet KRA, right? So who owns you at that particular time? Your employees, your customers, and KRA. So a lot of people, we wake up one day, oh, I'm an entrepreneur, then you realize, oh my goodness, I actually don't own my time. Friday was a holiday. I didn't take a holiday, I worked. All right, that's the first one. The second one is you go into business to make money, okay? And that's okay. There's nothing wrong with chasing money. Then you sacrifice 3 things: family, health, okay? Because we deal with a lot of pressure, stress, and all that. Okay. Now, when you're sitting with your family and your kids are young and you're telling them, do you think your kids will be happy to know that daddy will not be available because he's chasing money? Absolutely not. So you end up sacrificing the things that are also important for you. So you have to have that compromise. When you're being told by everybody, oh, but you need to have work-life balance. I don't believe in work-life balance, by the way. I do not believe it's possible to have work-life balance.
It's not possible.
No, it's not possible.
Hakuna hii at living below your means.
No. I'm talking about money. I'm talking about that you are an entrepreneur and you'll be able to have work-life balance, that you'll be able to have dinner with your kids and your family on a daily basis. Because you can't. So the balance comes this way. There's sometimes business will take 90% of your time. And there are times your kids or your family will take 90% of your time. Okay. So there's a quid pro quo, but don't never ever chase that balance.
Assuming you say you have a target, like
Yes.
the people who work with numbers.
Yes.
I'm going to work for 5 years. If I make an income, let's say for example, of $1 million bob consistently,
Yes.
and I live under 200K,
Yes.
and then I hit a certain figure, I'm free.
Yes.
Doesn't work.
You could, and that's not the balance I'm talking about. You could, but again, that's another myth. And I tell you what, you could be making that 1 million, you're saving 800,000, right? Then we go through hyperinflation. Who knew COVID was going to come and wiped away all those savings? Okay, so you find you have money that you have not put into activity. Okay, and sorry, I'm not anti-savings. No.
I'm following.
Not anti-savings. But you need to make sure that most successful people are the people whose money works for them.
So can't you get to a place where your money works for you,
Yes.
that you don't have to work 90% of your time?
It
So
is-
you can spend time with your family.
It's possible.
Okay.
It's possible. Not on early stage. Not on early stage. Like, for example, today in my life, my daughter is at home. I have one child at home. We do spend a lot of time together. But if you were to ask her about her dad in 2010, I'll tell you, alikuwa anakuja, ana drop bag anaenda airport.
Yeah.
So there was always that
Yes,
time.
yes.
And for me, I didn't plan to get kids early, but I'm so glad I got kids early. Because, when you get kids 23, 24, mapema. But now you end up growing with them. So, but I didn't plan it. If I had planned it, maybe I would never have gotten, or I've gotten them later. So right now, maybe in my 50s, I'd still be paying school fees, and I'm not. You get? So the issue, and I'm coming back to the story of work-life balance.
Yes.
If you decide you're going to have work-life balance, it will not happen. One of them will fail. Because like entrepreneurship space, you are really in control. So you probably know that I'm the chairman and an owner of an alcohol distribution business. So I distribute for Diageo in South Nyanza, Lake region.
The one Diageo.
Yes.
Hey.
And I have a partner. We are 2 of us. The partner is the CEO. I'm the chairman.
Okay.
So for example, we do Homa Bay and Migori was our last route, and we got it in 2022, right? And the numbers went like that. Then if you think about this current regime, early 2024, there was a whole story of illicit, okay? That illicit brew, the minute it is mentioned, what does it end up doing? It ends up creating room for corruption. Because what happens is now there's a multi-agency team, KEBS, NACADA, KRA, police, county commission, and we still have county government, right? So the first thing that some people will always come and they start visiting the bars. We want to check whether mnaweka illicit hapa. Remember, these are well-manufactured drinks that gives the government good revenue. But now all of a sudden you start working for that group. You're either stopped, the time your truck is leaving the warehouse, there's a county office, want to check branding license. Okay? And every county, remember we are in many counties. Every county you pass, you have to pay a branding fee. Okay. It's legal. But the illegal ones is how you get harassed. Now imagine you have a truck that has maybe 1.2 million of liquid that you are taking from Kisii to Kilgoris.
Liters or shillings?
Shillings.
Okay.
Okay, you're taking to the bars in Kilgoris. And then all of a sudden, a rogue policeman stops you. Okay, starts checking tires, check. Okay. Remember, our trucks are brand new, so you already know. Yeah. Next, they will move from there. Say, no, part of what the government is focusing on is illicit brew. So we need to check in. We need to enter this truck and start looking at what you've carried. They could delay you there for 2-3 hours because they can.
Yes.
Okay. Now, the alternative for me is you call breweries. Breweries, external affairs. By the time they can get and solve this particular problem, you've already lost your margin for the day. You guess?
Yes.
So, when you hear entrepreneurs saying the government needs to create the environment for entrepreneurs to thrive, and it is nothing big about it. It has happened before. We saw it from 2002, where you find you will thrive as an entrepreneur because the entire system is working to support you. So we moved from illicit higher. Then, of course, there was a bit of destabilization.
Not moved from illicit, moved from
that being their focus.
Yes,
now that focus ended, and many bars were closed. Okay, so that happens, and I'm not saying that we should sell illicit. Okay, but if someone had been appointed by a brand like Diageo, they have checked very many things, and Diageo would never take a risk like that. So when your outlet is being harassed, okay, and we went through it. I'm not saying now. Higher. Then we go. We wake up, and then the Gen Z protests come. Okay, good idea, good things. But who do you think suffered most at that particular time? If you sell alcohol, you close. If you have trucks, what do you think will happen in a truck in a protest that full of alcohol? Gone, and you will lose. And depending on your insurer, they may not pay.
Yes.
It is not necessarily that there's anything wrong with the protest. So now, and I'm coming, it's a long round way to answer why you should never do business to beat inflation.
Okay.
There's some things you can never plan for. Some things you just never. Some of them are acts of God. The roads have flooded. Okay? And you hear Transmara, there's a hill up there, there's a bar that you need to serve. Okay? Your trucks cannot go through on that road and everything. So you get disrupted. So if you decide to target a low growth number and all these things that you cannot plan for and nobody can plan for it. That's why strategy is never 100%.
And the alcohol is just an example, Ama.
I'm giving you as an
this
example.
This is standard for all business, because for alcohol, you could say that's the work of Jesus.
Correct.
Sio kawaida kunyesha.
Yes.
So in terms of these patterns and seasons,
yes,
you cannot, like, the business environment in Kenya cannot allow you to plan long term.
You used to be able to, but there's always a disruption of some kind.
Okay.
And I'm not saying it's always political. Sometimes it's weather. There's always a disruption.
Okay.
So when you're planning, you can plan, pivot. It's called risk mitigation. So when you employ a specialist risk person, tells you, if this happens, you will do this, you do this. But they can't cover everything. Now, and that's the reason why in a territory like where we are, you have to make sure that your growth numbers are, your target is big. Anyway, so I said you start with the end in mind.
$1 billion.
Yes.
If you can scale to.
Correct. So that even if you don't achieve $1 billion, even if you do $100 million, in the top 1-2%.
Okay.
Right. Now, the one part I tell people about how you can make money in the world, anywhere in the world, identify a human problem.
A human problem.
Human problem. Pain relief. Pain relief is one. Convenience is the most common. Where human beings are inconvenienced and you can find a solution to reduce that inconvenience, you'll make money. As long as you realize that you're solving a human problem.
You know, that's like endorsing corruption. Corruption is solving inconvenience somehow.
Oh, it is. And that's the reason why
It's a cash cow.
Majority of the countries around the world, including the West,
business.
It's there. So you identify, look around you. Okay, what is it you can do, to create convenience for human beings, or pain relief,
or create the inconvenience and solve it.
Now you're being evil.
I'm thinking.
Oh, you create the inconvenience,
and then
it's an interesting one. Yeah, but that's my approach to entrepreneurship.
Okay,
and I'm doing this until I'm not able to do it anymore.
I'm very interested in liquidity, but there is something else you say, Hapo, raising money. But then you also say something very scary. The so-called angel investors, funders, are not as angel as we think. Where are you getting 25%? Those terms are impractical.
Usually, rarely do you find angels asking for that kind of money. It's usually private equity. Okay, you've gone series A, B, C, proof of concept, you're profitable. It is those people who come and find you have a business, and this business is growing, it's profitable, but there's an opportunity to scale. You need money to scale.
You need money to scale.
Yes. Say, for example, you have a neat business in Kenya that, let's say it's even turning over, even say 100 million, and making a profit of maybe 15 million net, right? That's a very neat business. But you want to grow either across territories, okay, across Kenya, or you want to go into Zambia or Uganda, right? To go into those countries, the first thing you need to think is there a market? First, you identify the market exists, or who can buy the same product that you're selling. Second, what's the regulation? Third, and is a big issue, culture. What's the culture of the country, right? Do you have talent available? Okay. Then you go into those countries, you still have to start like afresh. You are registering. The brand has to be known because it's a different country. So you need to make sure you create awareness, marketing. Now, maybe you have been putting away this 15 million. So you're using internally generated cash, okay? And you use that. Okay. Remember, you're taking a risk now. You're taking reserves to go and grow, right? So a lot of funds will come and approach you and tell you, look, instead of you using your internally generated cash, we want to come in and take a position. We will give you 30 million. We will take maybe 25% shares, and we will exit after 5 years, right? When they tell you we want an internal rate of return of 30% or 25%. Yeah, that's usually on PE. There are very many levels. Angels, people try and again make this sophisticated. Angel ni mimi unataka kuanza biashara. Okay? So when you're starting biashara, it is friends, family, and fools. So a lot of us angels are fools. Because we want to take advantage of your business idea. But because it's an early stage, I'm investing in your business in an early stage, my risk is very, very high. Yeah. So I cannot come and tell you at early stage, I want an internal rate of return of 25%. Okay? I cannot. We are bootstrapping together. Okay? So where will I be taken out? I could be taken out by a series A. Because now you have proof of concept, you have revenue. You may not be at profitability yet. Okay. Or series C, where you have profit. Your profit now you're trying to grow. Then I said, we did very, very well. My 1 million is now 20 million. We shake hands, then I go. So that, angels do not ask that. It is usual, it's venture capitalists, and private equity. Those are the people who will ask that kind of return. Okay. And they're also the same kind of people who will come with strings like impact. I just don't want to do a company. I want to see your company making an impact. Okay? Impact may be serving the bottom of the pyramid or serving an unserved market previously, but lower than what you're serving. They are always, money always has strings.
Money always has strings.
Yes. Money always has strings. Nobody will give you, no company or individual will give you money without a string. I could come and invest in your business, but I'm not investing for me. I'm investing for my child to become a shareholder in the future. That's a string. Or the simplest, when you go for a bank loan, why does a bank check on you? Your ability to pay, and they also check the fact that they will get that yield. If the rate is 19%, they're going to make, that's a string. Okay. Kenya is a bit better. There are countries like in South Africa, a bank can lend you money and take a position. They become your business partner and they are sitting on your board. Okay. I hope one day we will get there. They become like investment bankers, but they're actually commercial bankers.
Yes.
So those sort of things happen. But this money you see in the streets of Kenya chasing deals comes with a lot of strings. We call them covenants. You sign covenants. Let me give you a common covenant. It's not that it's a bad covenant. Something called drag. Okay, it's a covenant. So we sign a deal and I say, I'm dragging you. Meaning, I'm an investor. If I go out there and find someone who wants to buy my shares, you have to sell yours. I'm dragging you out to sell, so we sell together. Investors do this so that you cannot block them from selling in case they find someone who wants to buy 100% of your business. Okay? Then there's tag. I've invested in your business, but you're getting tired, you want to exit. If you sell, I have to tag on you. So those are some of the covenants. But you can get covenants, someone who comes and says, all right, I'm giving you money, but you cannot change the strategy. And we have rights to maybe majority of the directors, or we have rights to your personnel. You cannot recruit a CFO like this, a CEO like this. You get?
I started my idea.
Yes.
But sasa because nimekuita, you come to
and
business,
invest.
so you come tell me what to do.
Exactly. That's how it works. Not only that, I can do that, and based on the covenant, I kick you out. How many people do we know that have gone
My
through
company
that
I created.
I can give you very many examples. Yes, a PE fund will come and kick you out of your own company.
That's
that you
colonialism.
started. No, it's not. That's a money. That's how money works in the world. You've approached a company to invest because you want to scale, right? Dr. Kimori wants to make sure that he's everywhere in Africa. You don't have the money to do that, so you take the money from somebody.
So I take you to Africa, then you kick me out.
Yeah, because you've allowed me, because we also don't negotiate very well.
Go and kick me out in Congo, and nilikuwa na thrive in Kenya.
So that's the advice, and I've gone through this twice. For me,
what happened now? These
are lessons. Smart. Well, sometimes you think you're smart. There's always someone smarter than you. Okay. So, for example, and this happened to me. So, one of the businesses that I owned, I raised money, not a lot, $3 million for 25.1%.
$3 million.
Yes, some years back.
That's standard. That's over 300 million. Like
at that time it was less than, because the dollar was like 80.
But over 200 million.
Okay.
In my simple-mindedness.
Yes.
So now you have created a product.
Yes.
That you can sell 21% of it.
25%.
Yes.
For 300 million. That means
for 300 million.
Yeah, but that $3 million. So if you do your month, you can see what the valuation of the company was.
If that's 21%, now you...
It was almost a bit. Okay, and I took the money, right? And I had a good law firm. It helped me negotiate the terms. Okay, so remember, I'm street smart and I'm book smart. So we negotiated very well. The things they demanded, we gave them rights to the board, right? No, didn't give them rights to personnel. Didn't give them rights to the brand, but I gave them. So the business is growing. Mi pesa yangu ni mshahara na ile savings, because this $3 million wasn't coming to me. It is an investment direct into the company. So I'm not selling.
It's not like 300 million. At sasa you do what you
I like the way you
now.
just rounded off 300 million. Let's work with 300 million.
Yes, let's work with that.
So it's not 300 million to me, even though I'm the founder of the business. It is 300 million into the company.
Yes.
All right. Okay. So the business is running. Business always hungry for cash. Okay. And that's why debt is cheaper than equity. And that's a conversation that is very controversial, but I'll come to it. Then we went on the second year. We needed to borrow some money, okay, for some project.
You have cleared the 300 million.
It went for the purpose it intended, but now it's 2 years later, you need more money, right? Remember, these funders, their job is to deploy money. That's how they wake up daily. We have a lot of cash, which we have raised from investors that we need to put in African businesses. You get? That's their job. My job is to operate and run the business and growing it. Eventually get rid of them because they are there for a short time. This guy's term was 7 years. Then they said, remember I gave away board members. So I've been left with myself and another director. So I've come with a paper, well thought out, me and my CFO. We need money, but at this point, we want to borrow because Kenyan banks were willing to give us money, to give us a loan. It was blocked at the board level. And they said, our job is to deploy money. We are shareholders in this company. So what we'll do, remember that the 25% was equity, they are shareholders. They lent the company money. Part of the conditions was for me and my business partner to sign away our shares. They hold them as security because we don't have the money to follow through on this loan. Makes sense? This loan will be repaid by the business, but what is their security? The bank could have probably asked for a debenture or maybe my land or my house or whatever. But now what has happened? They have moved from 25.1% on paper because this loan that they've given to the business, they are holding shares. The two partner shares. Okay. So let me wake up one day. My daughter was graduating university in Louisiana, and I said I want to go. I asked for leave. It was declined. The chairman said no. Where we are at this point, the business is struggling. I cannot go for my child's...
In your company?
That I started.
They will eat you alive ukienda.
I don't want to tell you what happened because I went, but I'm just giving you a situation.
Yes.
Okay? So now, and I don't think they meant to get us out, but at one day we woke up and we were employees.
Oh, so your shares are no longer...
Because, remember, we are running this company.
Yes.
And we are running this company, and we now there is a loan that has come that the security is our shares.
Yes.
Right?
Yes.
The company, we are running it and we are struggling to pay them because it was supposed to be a bullet payment, not monthly. And they converted from 25%. They ended up owning 90% of the business. So my partner and I are flower girls, basically. That happens on a daily basis. if you look at it, and I know most investors who are looking at it will say, but there's nothing wrong with that. There's a lot wrong. At that particular time, that second round, we could have gotten money. Yes, more expensive money though, okay, from local banks. So let me come back and address the issue of
Debt is cheaper than equity. Yes.
Okay. Remember my phrase, money has a string. If an investor puts money in your business, okay, apart from the outcome, which is the yield they want to get, whether if it's a debt, then there's a coupon rate that you've agreed that you pay monthly and then probably pay back the principal. So that coupon is a string, okay? But that coupon comes with something called portfolio management. They want to be involved in your business. And many of them will tell you that we are going to add value, we are bringing more than money, but actually no. They could come and change your culture. They could come into your business and do a structure like what I'm talking about. Or if you have not negotiated well, they may change your strategy. All of a sudden they tell you, I think gambling is doing a good job. Maybe we should explore. And they bring you someone from Montenegro who is an expert, or Bulgaria.
Yeah.
You cannot fight back. And you know, the minute in boardrooms, people start fighting in boardrooms or start voting by share weight, that business will not last long. You need consensus. You need to agree. Even when people make mistakes, you need consensus. So that's one of the risks of taking equity. So I advise a lot of businessmen, take debt, okay? Because debt has the fund, they just want to prove that you can be able to pay. Once you pay them, shake hands and walk away. Yeah. That's what I mean, cheaper.
Okay.
Cheaper.
Okay.
Equity, the advantage of equity sometimes is patient. And someone can come and say, okay, I'm investing for the long haul. I'm going to be here 10 years. Very rare, unless you're a multinational, you're big, would you get a loan of that period? Loans usually is 3-5 years, if you are lucky. So yeah, these are experiences. I'm not telling you stories of Java. I'm not telling you that in Ilisoma are things that are faced.
And this is a new level, and I'm glad you unlocked it, of we are not talking small money.
It doesn't matter.
In this sense, because we have different levels of businesses. There are people who are, most people, when people think business, they think survival. They think, I want to start something that can pay rent, pay school fees, and be comfortable.
Yes.
Right? What's the place for the comfortable person in this sense? Like you've started a business that gives you, when you go back like 15 years back,
right?
15 years back, let's say, for example, you earn X amount of money. Like your business can afford to pay you, let's say, for example, $500,000.
Yes.
Then that's good money. It can pay you $500,000. Yes. When you decide to play at this level of comfort, you can drag it to retirement. If you say you don't want to scale at Atapama lifestyle.
Oh yeah, okay.
Yes.
Yeah. So you've created a business to take care of you and your family, and that's okay.
Take care of your family.
Yes.
Right.
Yes.
So there's a place for the comfortable person.
There is.
So for the person because I've toyed with a concept, an idea by Nassim Taleb.
Yes.
And this he's talking about traders.
Yes.
Like for traders who have a high risk appetite.
Yes.
Like for daily traders, their survival rate in 10 years is in the single digits.
Yes.
But the people who play safe, the people who don't have a high risk appetite, they survive longer and they can get returns longer. Yes. So if your target is like, if you chase the big deal, right? You can burn, unaamka tena una burn.
Yes.
But there's a certain level of safety you can play at, you can survive.
No. I deny. I tell you, businesses will always require external money. Will always require external money. It could be a bank, it could be your savings, it could be family, it could be fools. You will always require external. Even today, even Mama Mboga in the streets either has a Fuliza loan and a Mishwari loan. It's external money.
if you've had a good job and you've raised kama 15 million,
Yes.
and you have capital to start a business like kama 3 million,
Yes.
and gives you a turnover ya kitu kama, let's say for example, 500,000, and this being ambitious kabisa,
Yes.
because we've had a very controversial debate here,
Yes.
that the Kenyan business environment with a capital of 2 million, you can't get a net of 50K per month. It has been very controversial.
There's a conversation of that nature. I'd like to go and do my math.
Yes. And I agreed with that math to the extent that 50K looks like a very small amount of money,
Yes.
but it's actually 30% per month.
Okay.
You understand?
That is possible.
It's possible.
That thinking is possible. So I told you what I do today, Nduati Consulting.
Yes.
What capital did I need for Nduati Consulting? 0.
But the capital, you yourself,
I'm
you are
the capital.
Yes.
Correct. Not cash, right? So, but what am I selling? What is it that I sell to companies, to the businesses that
Your
I
years of
consult for?
experience,
It's
your
my
failures.
years of experience that I've invested in.
Yes.
Yeah, but of course, I don't charge 50,000. You get? So it is possible.
Yes.
When you're doing a service, it is possible. But I will go and do that, man. But coming to your point, you are trying to say that someone, you're talking about the 500,000 amount that you're making on a monthly basis, that you may not need external money.
Yes. If this thing that is touted, that if you live within your means,
Okay.
like you can,
The business owner or the company?
the business owner.
Okay.
Oh, and I think you create a very good distinction, the business and the
The
company.
business and the company
So,
are two different people.
Yes. You can have money as a business,
Yes.
and you don't have money as the business owner, and you can have money as the business owner, and you don't have money as a business.
In fact, the latter is what you're talking about. Like, I go through many times as an entrepreneur where I have no money at all. No money.
But your company has
The
money.
companies are trading, and they have money.
You'd go low on fuel, hauna pesa ya kuweka mafuta,
Yes.
but your company has 400 million.
Yes.
How? Why?
Because the company is not your wallet, and you do not work in the company. So the businesses I am in, there's some businesses where I sit on the board. And what do you think board members get a lot of money?
It is my idea. I am the reason you are all here.
Okay. Yes.
I sat down, I put together this idea,
Yes.
and nini. There's 400 million there na gari yangu haina mafuta.
Think about it this way. I don't know how many shares, what shares you own. Like I have shares in KCB, right? I don't work there, but I'm a shareholder. I'm an owner, right? So there are two ways those shares can help me. Wait for dividends at the end of the year, right? Or trade at the Nairobi Stock Exchange. It's my company. KCB is my company. I'm a shareholder, right? How easy is it? Okay. And that's a listed company. It's easy to sell shares. I can go to the market and I'll find someone to buy. I can also pledge the shares and get a loan. You get it? Okay. A private enterprise that you own, first of all, is not your wallet. You cannot just walk in and uende wambie CEO nataka milioni moja sahi.
So I started it for other people.
No, you started it for yourself, but you don't work there, so they can't pay you a salary, right? So what are you going to do? Earn a dividend, which is a share of profits, right? For you to be paid a dividend in a business, the board makes a decision at the end of the year. After you do your audit and say, we made 100 million, you probably have developed a dividend policy before. Maybe your dividend policy is, we'll distribute 20% of our earnings, right? So they made 100 million profit, so 20 million is what you're going to share with you, the owners. If you're the only owner, then you'll get it, right? So let's step backward. So you have a tough year, right? No, let's not talk about a tough year. Let's talk about an opportunity comes. And that's the reason why you need independent directors in boards. So an opportunity comes that So you have reserves, like I mentioned earlier, of 200 million. But there's an opportunity here that has come that could give you 500 million in 3 years. What decision do you make? You say, or do we make the investment? So on that particular time, the board says, sorry, we cannot pay any dividends. But you own the company. Okay? So how can they pay you?
I dissolve the company. I need the money now.
Okay. So there are other ways. There are other ways. But you don't expect that your company and your pocket are the same. And talk to any entrepreneur. You don't have fuel.
Sasa, that is the spirit ya nekogeria money. Because I have money, but I'm pretending. I started something that has money. So please break this down for us. I'm a simple-minded man. Let's say I'm an individual.
Yes.
Like you, Peter Nduati.
Yes, a solopreneur.
Yes, solopreneur. Like you have started Peter Nduati Consulting.
Correct.
You go there in person.
Yes.
You are Peter Nduati.
Correct.
You charge an invoice.
Yes.
Kuja, I consult for you.
Yes.
This is what I charge. Go sort your business.
Yes.
You have been paid because you are you.
Yes.
But then you are also a company.
Peter Nduati Consulting Limited is a business.
It's a business.
Yes.
Peter Nduati Consulting Limited is a business.
Correct.
You've been paid as you. It is a business, but it is you.
I'm the one who worked there.
Yes, you are the one who worked there. Like, let's say, for example, you get a gig where you've charged $1 million for a consultation. And then you get their $1 million bob. So please explain to me, as a simple-minded man, why I've been paid $1 million as me for something I have done. So why do I go put this money to the company to share it with other people?
No. Now this is different. A business like this, where I'm the face, I'm the CEO, the senior consultant, I will get paid. I will get paid because I work there. I'm working, so I need to be paid. I'm talking about a business where I started, and I've started many businesses, and I don't want to name any of them. So, and that business is running, right? It has a CEO, and it has a board, right? Even if it's turning over in the billions, right? The only way they can pay me, pesa maana, is dividends. Because it's the only way.
It is illegal for you to get money.
No, it's not illegal.
Thank you.
It's not illegal. It is the way you should run the business. You can go and agree with them. I know many people, especially the older people, who I've spoken to, who have done business for a long time. When you say, we retire, and you say, I'm no longer going to be chairman, let my son be the chairman. Then you negotiate with them, pay me $1 million per month. That's doable. But not when your business is growing, that you are looking. I just said we do alcohol distribution. When you collect money and no alcohol is sold in cash, that's not yours. You would have a bank balance.
Alcohol is sold in cash?
Yes, alcohol is sold in cash. It's cash. Would you give someone credit for alcohol?
Oh, no. You said alcohol is sold in cash.
Yeah, it's cash.
Oh, yes.
There's no credit. Yes. But that money is not yours. There's a manufacturer. There's a truck that you have to pay, a loan that you borrowed, right? There are employees to pay.
What's the logic behind not selling alcohol in cash? Because when
you get sober, giving credit.
Yeah, when you get sober, you will rethink your decision.
No. You think about you go to a bar and you order. First of all, when you're not sober, so you give someone credit to drink alcohol, and how will you catch them later? Yes,
good.
Yes. So back to that story. So I'm explaining that in a situation like that, right? That company should not be paying you. They're paying you as who? You don't work there. You're the shareholder, but you do not work there. So you need to wait for dividends. The profits will come. Watakupatia. But on an early stage, umetoa pesa zako kwa mfuko, umeweka kwa biashara, right? So that it can pay you in the future a lot more money. So you don't take the money that way. So you and your business are not the same thing.
So
and in fact, in law, your business is a being by itself, can be sued can sign contracts, can get into engagements the same way you can. Your engagement, with your relationship with this business is you're a shareholder. Unless you work there. Like now, there are businesses that I've set up where I'm the CEO. You see? So I'm the CEO. But you also remember, proper governance demands that your board is independent. So unaleta watu wengine tu.
And they determine your salary. See, that's how you get kicked out.
But if you want to run business well, you need governance.
Let me give you an example.
Okay.
In the most remote
You're very contrarian, you.
no. In the most remote format and in the basic form, I noticed a pattern of the concept of start a business for me.
Okay.
So sometimes just my mom likes to be busy, right? So I give them money to start a business. I think I've done that twice.
Yes.
No, 3 times. One, yeye peke yake, another with my sister,
yes,
and another combination,
yes,
like they combine, do something.
Right.
Then I notice that for the capital I give them,
yes,
it doesn't go past 3 months.
And
this is in the like you to like
yes,
just to be busy. Give them 100K, for example, 3 months out.
Yes.
In fact, 3 months nime overstay, 2 months kaput.
Yes.
Then I'm like, why do I give you 100K to start a business? Yeah. Yet I can give you 10K every month for 10 months. Like, why would I give you money to wipe yourself out, like, of business in 3 months maximum? Yet nikikupea 10K,
yes,
then I prepare, after nini, I get another one.
Yes.
In fact, you're eating money.
Yes.
Why would I start a business
yes,
that, let's say I invest like 10 million and then put it in the hands of strangers
yes,
who can kick me out of that business
correct,
when they decide, whereas for 10 million, if I decide to eat 100K per month, I will eat that money past COVID and everything.
So first of all, let me just disabuse that all investors are mean and will kick you out. It happens if you do not. The lesson is get good lawyers, negotiate well. Do not just expect it's going to be honky-dory.
Yes.
Okay. I want to answer your question of your family.
Yes.
I said in the beginning there's bootstrapping, and money comes from friends, family, and
I'm the third
fools.
one. Okay, sawa.
So you determine which
You've
one
made
you are.
your point.
Yeah. You should never look at it as an investment, because, right, work is dignity. That's the first thing you need to remember. The reason a lot of us wake up to do the things we do is the dignity of working.
Okay.
Work is it's a human need. You need. So when you give me money, you make me a dependent. If you give me money to start a company or start a business, even though you're my family member, you build my dignity. You allow me to explore my energies and try and make money, even if I'm losing. Okay, that's part of black tax. Yours, you need to take it. You are the third one, and it's black tax.
Sawa.
Yes. Now, I need to answer that question again. How you remove money from your pocket, you invest and you start a company, then you allow other people into it. Again, you cannot grow solo. You will always have to allow other people into your business. In fact, my approach is to give shares to the employees first.
To make them a part of the vision.
Because sasa wao ndio will be waking up at night worrying about the company. Because you've started, you're an investor. Okay? And then you determine when you want to exit.
Oh, you
develop your successor early. You determine when to exit. In my 60s, I'd like to tour the world if it's possible. I've already done over 100 countries, but I want to tour the world seriously.
So 100 countries. So
there are 182 countries. There are not many remaining.
Okay.
Na stand in North Korea.
Na Iraq. Okay.
Maybe Iraq. I don't know. So that's my ambition. For me to do that, there's something I need to do today. I have to work. I have to chase. I have to hustle to ensure that I can be comfortable. My mentor tells me all the time, he tells me, you started well and you build well. You're now cruising. Make sure you finish well. Because a lot of people, and I've gone through my stories. I don't have to repeat. I've gone through the ebbs and flow of business.
Yes.
So right now I'm a bit more cautious, and also my risk appetite has dropped. My risk appetite cannot be how it was in my 20s. In 20s, I could have invested in junk bonds. Today, I won't put money in junk bonds. Okay. So the point you need to do is, and I said in the beginning, always start with the end in mind. Are you building a business for legacy? It's going to be yours in the family for years to come. We'll be seeing started in 2025. We won't be here, but people will be saying, you see those businesses you hear started in 18?
Yes.
18 something. Is that what you want? Or do you want to set up a business for sale? You want to build a, because your approach will be totally different.
Okay. Yes.
If you're building your business for sale,
yes,
then the governance issue has to come.
You're building a business for sale. Why are you selling a business that is working?
So you can go and do something else.
It is working. It can continue giving you money, but you're selling it.
You see, the business has reached a particular level, so sometimes you fail.
Or it's about
beyond here. No, it don't fail, but it can do better. It can grow. That's why there's mergers and acquisitions. Allow yourself to be acquired. Okay, you retain a smaller share and tour the world like what I want to do. Yes, but then there are people who build a business and they know. Certainly the Asians in this country do that very well.
I know.
I'm building this business. Yeah, my son at 12 starts being a cashier. I'm teaching them how the business works. They will come when they come back from uni. They come in. Eventually, they become CEO. Then I become chairman. Then 10 years later, I retire. They take care of me. Then they will continue like that. So you need to determine that early enough. Okay. Also, you also need to understand your children. Are they really interested? I've tried to bring 2 of my kids into my business. They're not interested at all.
Not at all.
Not at all.
How does that make you feel?
You see, initially it used to bother me a lot. And I think, I'm building all this for you. But they're not, Gen Z, they're not interested.
They don't care.
No. And it doesn't mean that they're not doing anything else.
They just want to be beneficiaries.
No. Actually, I don't even support them.
They end up so you can't even use the benefits.
No, they don't. I mean, there are little things like club bills, I pay for them, little things of that nature. A holiday maybe, or 1 holiday a year, I fly with them. But most of the time, they take care of their own rent, they feed themselves, they are not dependent on me. They just don't want to be in these particular businesses. I have a child of mine who told me, I don't want to sell alcohol. Okay. So I even have one of my kids who graduated in 2022, has worked in 4 of my businesses, and he's been fired from all of them. He'll kill me, but it's true.
He's been fired in all of them.
All of them.
That's where the independent board comes in.
And you see, you need to let the leadership in those businesses make that decision. Chairman's daughter or chairman's son is wrong for our culture.
But that's a paradox. He or she is being fired and they akule dividends kwao.
No.
Like why?
No. When he's being fired, it's me to determine whether I'm going to support him or not. But it's also that's another cultural issue. Tell me why it works in the not Asian, Indian community. That it's a cultural issue. Also, remember, they live together. As guys, when our kids turn 18 to an end, so you cannot necessarily depend on your kids to come and not necessarily take your businesses. And I'm not saying all my kids, I'm saying no, 2 of them are totally different. They're interested in entrepreneurship. But I even have a child who told me, Dad, I cannot be an entrepreneur. What I've seen you go through, I would never want to be an entrepreneur. So you decide now, then whatever I'm building is for sale. Because if you hand it over to them, maybe they'll make losses, and then the companies will collapse. So that's why I say think with the end in mind and then keep checking. The last advice I'd like to give is, knowing when to pivot.
Pivot is when to move to something else.
And it could be in the same business. Okay, but you take the business and move it into a different direction. Okay, there's something called a product life cycle, and I can draw the graph for you. So a product reaches a peak, right? For that product to continue at that level, not to come down, you need to make some investment here. When it reaches its zenith, the product life cycle. It's the same with all businesses. Founders, us guys, at a particular level, are the worst guys for the business. Because first of all, you don't have the energy you had, and then all of a sudden, you find a founder syndrome.
Sentimental attachment.
Sentimental, yeah, you still want this business to remain the way it was. Whilst at that particular time, what the business requires is new energies, new brain, new technology. But you're saying, lakini sisi tumesurvive hivi tu. We've been like that. And this business has paid us. At that particular time, the founder is the worst person for the business. Needs to have left. And leave it to bring other people who can, product life cycle, grow that business. But you need to determine that. And it's not easy. These are all mistakes that are made.
And there's no place for like, in fact, this, you can summarize this in short, like know when to pivot, right?
Yes.
In your season, there's no place you've gotten money and then you feel like this I can live with this. I can live on this. Like Niko Sawa.
I have.
Financial freedom.
I have.
But then you blew
I chased the number. There's a number I chased.
You got it.
Oh yeah, and I passed it, and I surpassed it by.
But still, that wasn't enough.
No. I was too young. Okay. When I achieved that number, I was 41. Okay. And
I'm sure it's the early alphabet. Niko sure.
So, and I needed, okay, I needed to explore other lives, other side of business. I needed to do that. So I took out my savings and I reinvested. And the first business I invested in failed badly. And the second one also failed very badly. So what happens? See that number now? That number came down. Okay. In addition, the things that I told you about, things you can't plan for. Like COVID really brought my net worth down crazily.
So this thing of if you make $1 billion, and I'm being very careful with words here, that if you make $1 billion, you can spend 100,000 per day for 32 years. So I'm assuming, let's say for example, I'm just giving an example.
Yes.
At 40 something, you hit a number. Let's say, for example purposes, it's $1 billion.
Yeah.
That means if the math is correct for the next 32
my
years,
numbers are public, but okay, around that range,
exact. Thank you.
Yes.
So let's say you have $1 billion, and then you say if you spend 100,000 shillings per day for the next 32 years, you're sorted.
Yes, it's doable. It's doable. But remember, purchasing power changes.
Okay.
You always need to remember, right? The first time I drank a beer in 1992, right? It was called export. I don't know, Tasca export.
Yes.
It was 3 shillings and 25 cents. No, I'm not talking a long time ago. 92. That's 33 years ago, right? I don't know how much a beer. I don't drink beer, but I sell. I don't know how much a retail is. I hear even beers 400 bob in a club.
Whoa. That's over 100 times.
You see, if I had made a B, and I'm not, and I want to spend that 100,000 in 1992, my salary was 5,600, and I used to live in an apartment in Westlands with 5,600, and I was paying a car loan. I had a Fiat that I used to pay.
And my mom used to earn 5,000 in 2006, but she was struggling to pay school fees.
Possible.
That
is me in 1992. You see, I mentioned the price of beer. Now, if I had decided at that time I'm going to retire and the money that I have will sustain me, I wouldn't, with that salary, with that income, I can't afford a beer. You understand? And that's the issue of inflation over time.
So now, Just
So
on
back
that
to the
point,
1 billion stories you're talking about. Assume that is the kind of money. You see, at the time I reached that number, it was not the end of my ambition. It was, I achieved the number, but I didn't say that I'm going to retire. So what, that money only makes sense if I invest it.
only makes sense if you invest it.
Yes, why am I sitting on it?
There's different kinds of investment. If
Yes.
you take $1 billion,
Yeah.
it's also investment at a 10% return.
Yes.
Right? Super safe at a 10% return.
Yes.
That is, oh Lord, that's over 100 million.
Yes.
Right? That means you could take home a salary of 10 million indefinitely.
Yes.
10 million indefinitely. And I'll give you a practical example. I know someone who won Abisai.
Yes.
He won 200 million.
Yes.
In a betting nini. So one of the proposals he had been given, and it was for, as in the math people are doing,
Yes.
take just 90 million.
Okay.
And put in treasury bonds. You will be earning 1 million shillings per month for however much you wish.
As long as the T-bills remain at that rate. Remember the rates will drop, sometimes will drop. You get, not all the time.
Yes.
Let me be giving you a practical example. The whole world knows I owned an insurance company in Kenya and I sold.
Yes.
But by the time I was selling, I was not the only shareholder. So there was 1, 2, 3 shareholders who were older than me. One of them was in his 60s, right? He took his portion, okay? He put his portion and put it in apartments in Ruaka. Remember, he's older. Now maybe he's in his 70s. That was the right investor at that time. That time now Ruaka was climbing, okay? Right. So he didn't go to private enterprise. He just started to put it on passive income of real estate. The other one was also in his 60s. And he also took that money and put up a building in the city here. Big building. I was younger than them. So what did I do? I took the money and I put it in private enterprise, different from them. I didn't do real estate. Yes, I built a house.
Yes.
But that's a house you live in is a liability.
Yes.
So I thought I've created the wealth through private enterprise, and I'm young. I'm younger than them, so I have a long time. So that's the reason I took my money and put it in private enterprise. Private enterprise, one of the businesses was an existing business that I invested in, and I'm still a shareholder. One is a startup, which was manufacturing. Failed badly, burnt. Do you remember I had a number on top there? So that number obviously now stopped existing. Because you put it in a business, 2-3 years the business has failed. Did I make a mistake? No, because you make the decision, any decision you make with the data you have in place. Today, if I got that money, the money of what we sold that insurance company for, if I was to take that, to get that money now, remember my risk appetite is lower. I would do some of those things that you're talking about, put it in stocks and everything. But what happened? I still lived a very good life. My kids did live a very good life. I did what you do in your 40s, midlife crisis.
Yes.
I did. I always had the ambition to tour the world. I did. I spent money on rugby, which is a passion. Spent money on horses, which is a passion.
Yes.
So I did still enjoy and make investments. Not all the money went. A lot of that money is tied in private enterprises. And at any single time, if you look at my graph, okay?
And you're used to the adrenaline. Yeah.
It's not always a good thing, but I'm driven. I'm driven by, I don't like calling it adrenaline. I'm driven by taking advantage of opportunities.
Okay. Yeah. So I told you we'll come back to Dr. Chris Kirubi, the late Dr. Chris Kirubi.
Yes, a man I respected a lot.
Me too. So now, I'll paint for you a scenario. Like you said that he was not afraid of taking risks even in his 70s,
yes.
Right? So when he passed on, I remember me processing that. I was like, I'm sure he knew that time was up.
Yes.
In my opinion, I'm
Probably,
sure he
he
knew
probably
that time was
did.
up.
Yeah, because he was sick.
Yeah. So I processed that from a place of like you have everything,
Right.
and you're at a place where sawa imefika time,
Yes.
and no money can now come through.
Yes.
Like
It happens to everybody. Yes.
yes, happens to everybody. So I watu wameenda don't tell no tales, right?
Yes.
So when you look at life from that perspective,
Right.
yeah, umefika hapo and you have all the money, but there's a place it doesn't come through.
Correct.
Right? Do you think he processes it from a legacy perspective, or from a place, I've done all this, but then it can't. And the reason it can't help me. And the reason why I process this is I passed through a place where the week that he died, I saw someone sleeping under a tunnel.
Yes.
Like Amelala.
Yes.
So now these are two people who have, one has something else, as something the other doesn't.
Correct.
One has all the money
and
all the houses, but time to log out is here. One has all the time.
Yes.
Anaendelea kufanya time yake, but unfortunately that's how he does it.
That's how health goes, yes.
Do you think this comes into play uko mwisho ya there's a place, like as much as we chase money, there's a place it doesn't count?
No, I would think Chris had made decisions years before. Maybe at the age I am in his 50s, because he died in his 70s.
Yes,
He'd already made his decision that I am building businesses for legacy. But also you need to remember, even during those particular time, and the reason I respect him, there's some assets he sold. You probably know that Old Mutual, okay, bought UAP. He was a shareholder. And he must have been part of the plan to sell.
Yes.
You also probably know that Centum has built and sold businesses when he was chairman. So I think he had already, long before sickness, he had already decided in his 40s or 50s, there's some assets that I'm building for legacy, and there's some assets I'm building to sell. The story I was trying to tell about him was long before he fell sick, when he was bidding for this project for a coal plant. And you see, at that particular time, in my Dilulu, I'm thinking, at 50, I'll retire and enjoy my life. But Chris reminds me of my mother, who is in her 50s, her 80s. She's worked all through, we've seen her work. That issue of work is dignity. And you move away from making money. You move away to making an impact. The phase I'm going through my life is a phase called from success to significance. From success to significance. Very, very many people become successful, but how significant are they? You get?
Yeah.
So today, I can tell you since COVID, I make less money than I made in my 40s. Back in my 50s, I make less money. But I went above money. And it's possible the universe gave me that money then because I had children, I had mortgages, I was building houses, a library center, and I was touring the world. I had all these things that required that. Even now, even if I wanted to do those things, I can't. I'm older. You get? Today, I survive on 10% of what I used to make 10 years ago.
And you're comfortable?
I'm probably more comfortable than I was then.
Okay.
You get?
Yes.
After a while, it stops being about money. And that's what I'm talking. It's about impact, significance. Yeah. In life, I sacrificed then so that I can enjoy now. You understand? So that was a process that I needed to go. And there's a phrase I tell, youth is wasted on the young.
Youth is wasted on the young.
Yes.
Okay.
Youth is wasted on the young. Because I should have even pushed myself harder then. I'd have used my youth different. Okay? But now it's come to the hindsight that I know better.
Okay.
Today, when I registered the first insurance company, because I've registered twice,
yes,
I was 31. Okay? It took 3.5 years to break even and become profitable. Okay? So today, if I was to do the same thing again, one would argue because of all my experiences and everything that I registered an insurance company that it can break even in a year, it won't. It's still the same thing. Then I had built a brand in the insurance space. People knew me. Do you think young guys in the insurance space right now, people who graduated 2-3 years ago, know Peter Nduati as an insurer? No. They probably know me as a musician, or they probably know, oh, you know, Paparasi, or you get, or you the chairman of True Black, unaona. That you. So when I say youth is wasted on the young, is when we're young, we waste a lot of time, okay, when we should be doing the right thing to make sure that when you're older, you're doing better.
Okay.
If you met me 10 years ago and you tell me that 10% of what I was earning or making then per year would give me a much better life, I'd have laughed at you. Why does it give me a better life? First of all, you know, at the phase I was in my life with 4 children, right? I had to focus on school fees. Okay. And then we also have the scarcity mentality, right? All of us are running away from something. Could be poverty or where you grew up. I grew up in Dago. And there are many times I've woken up and I don't want to go back to Dago. Okay. Is there a likelihood? Oh yes, you can make a simple mistake and go back there. Okay, so we are always running for something. So you will always find that your biggest fear is what drives you. Right, now I'm no longer driven by fear of poverty. You know why? Because I cannot become poor again to that level. Why? I've built a lot of experience, right? In fact, I can tell you, as we speak right now, there are probably 3 companies that have asked me to join their board. And I can choose that. But what do they want? They want to ride on my shoulders and experience to grow. So it just tells you that even now when I started consulting so that the entrepreneurs that I'm engaging with don't make the same mistakes that I made. Okay, because I also made a lot of mistakes. So because all of us has that that want of scarcity mentality, that issue that, because our parents, I don't know about you, but our parents were probably the first ones to go to school, post independence. And our parents were people who, when they start a job, they retire. They will stay onto that role. Okay?
Yes, true.
They retire on that role.
True, yes.
Then we came in, Gen Xers. Those were baby boomers. As Gen X, okay, would stay on our job longer, but we were all itchy to get out and start our own things. Because our parents were not entrepreneurs. Mine were, but a lot of them were employees, kind of Gava, right? Then millennials followed us. They started doing jobs that we would never have fathomed. Me, I would never have thought that someone can survive by being an influencer. It has happened in my lifetime, right? My daughter, who lives with me, I only have one child that I mentioned there. I leave the house and I come home. She has worked and earned in her room. She has not walked out of her room. She waits for me. Like now, maybe she's called me. She's waiting for me to have dinner with her. Yet she's earning. It was unfathomable in my time. Where is it you could have worked somewhere? You're not waking up, but you spend the whole day in pajamas and you're making money.
Yes.
And so think about her and me in 1980 when I was in primary school. I could never have fathomed that a time will come when people will be working from their bedrooms.
Yes.
And they're not good living, getting out and facing traffic, right? If the youth that I'm telling that the youth is wasted on the young today would be thinking about Gen Alpha, I don't know the one after what it's called. If they were thinking about them now and putting the energy now, and then they'll be successful in the future. But that doesn't mean that you shouldn't have a good time.
Okay.
Some of the mistakes I made was having a good time. And there's nothing wrong with that. And that's when I say, I would never look back and regret the life that I've lived. Okay. And if I live as long as blessings like my mother, I have another 30 years that I can work hard and start again. And something that I say all the time.
That's an interesting philosophy.
The opportunities.
Oh, you can start from zero.
From zero,
every time.
yes. You need to step back, and I've done this 3 times. I've been at the point of bankruptcy, step backwards, completely step backwards, start again, and I become more successful than I was the first time. Now I'm older. I'm not saying that I should do it again, and also the risk I'm willing to take. But now, because of my experience and maybe wisdom, it will be faster. Okay? It will be faster and probably more successful. There's a theory that they say, if we take the total money that is in the world today and we divided that money across the whole world, we are all equal, right? In 3 years, the billionaires will become billionaires.
Everyone with money will have money. The ones without money.
The ones without money won't have money. And that's the issue of risk calculated and experience.
Okay.
Yeah.
So before we close, you will tell us about your upcoming event.
Okay.
And before that, I hope the offer that you have for the 3 companies to join the board, you get to join so that you also get a feeling of what it's like to kick people out of their business. Like, that's a good reason just to. So now you mentioned something about real estate, the house you live in, and then you can slide kitu hapo. That's a liability.
Yes.
What's going on there?
Okay. So I built 3 times. I built houses 3 times for me to live in. Okay. So you take a lot of money and you buy a huge piece of land like I did in Karen, and I built a home for my kids to live in. Okay. The mortgage that I was paying for was higher than the rent when I was renting. Okay. And it would have taken, because I built a big house, it would have taken longer for that to ever match. But you see, when I'm building that house, what am I thinking? I'm thinking that I'm running away from the landlord. But I moved away from the landlord to a bank. Okay. So you settle the mortgage and you're living in that house, right? The only thing about that house is price appreciation. But as long as you're living in it, it's a liability. An asset is something that can generate you income. Okay. So your own house, you need to accept that it's a liability. Maintenance, insurance, okay, improvements. Unless that house you're building to sell or you're building it to rent it, is a liability. There's something someone said recently on social media, and I forgot when I met them recently, I told them, I respect what you said. In Kenya, we shame people who don't own their houses. We look at them like like we're shaming them, okay? Or someone who does not want to own a car. But it's how we are socialized, right? You go to a showroom today and buy a car. The minute it gets out, it's depreciated. Yes. Okay, that's already a liability, right? And unless that car that you have bought is going to generate you income, it's a liability. Okay?
Yes.
Now, you may find it's easier for someone like me to use Ubers. And by the way, that cost of Uber is tax deductible. Your own car is not tax deductible. So they are bearing maintenance costs, maintenance for the car, its fuel is a cost and all that. And then you, of course, because a lot of us don't buy cars because it's a tool of trade. We buy it because it's good for our ego. Exactly. And I've gone through that phase. I've driven some of the top cars in this. When I think back, no, not necessarily. So you should never shame someone who says, I do not want to own a car. And you should never, let me give you a situation. And I'll give you a number, okay? At one time, I was paying 1.3 million a month on a mortgage. If I went to Muthaiga, could I have found a house of $500,000 and rented it?
Yes.
That $500,000 would have been a business expense and tax deductible. Why? Because I work from home. So when I'm doing my taxes, the costs, my housekeeper's costs, electricity, internet and all that. Okay? But did I really need to pay a mortgage of 1.3 million a month? No, and no way I didn't need to do that. Because when those kids started leaving, waliniwacha kwa kihol. You see?
Yes.
Why did I do that? That's why I'm bringing it up. Scarcity mentality. I didn't need it.
But do you have to go through that experience to appreciate that it's not actually necessary?
No, and that's why I'm talking about it so that people learn. Because I wish someone told me.
Yes.
So you understand? Let me explain about the last issue that you raised about board members. So I've served in boards. I've served in public boards. Yeah, I've served in listed company boards as director and chairman. Then at one time, just before COVID, I decided I'm no longer going to sit on boards for businesses where I'm not an owner. That's like a phase.
Yes.
Okay. So I'm likely going to accept these board positions.
Okay.
Because it's within the season of where I am. I'm on a season of one, giving back, two, seeing where this consulting gig takes me. All right? My consulting and speaking gigs is the season I am in. Because if I don't do it, one day I'll end up going to the grave with all this knowledge. Okay? And what does it have? What impact is it helping? And that's also the reason why I'm writing a book. It's because you were brought into this world for a season. In 100 years, none of us here, people will never remember us unless you make an impact. But I'm not doing those so I can be remembered. I'm doing it because it behoves me that the universe gave me these blessings. I must as well look for a way to share them. It's the same reason I have Nduati Foundation. It's not because that it's good for me to have a foundation. I'm not Bill Gates. I don't have that kind of money. But I decided to set up Nduati Foundation to corporatize my giving. Because there was a time my PA used to field calls from churches, Women's Guild wants a guest of honor, your next politician is running, but needs money. That's how it used to be. Then I decided the only way I can actually make an impact with the little money that I've saved is to create a foundation. And to start my foundation, I sold a piece of land and I put it in the foundation. Then I decided I'm going to pick a few businesses and take a percentage of their profits into the foundation. And what that foundation has made impact, I've educated very, very many people. I mean, this hall would be full if you count from when I started paying school fees for people.
And there's an importance...
Because I don't have black tax also to pay.
And there's importance of like putting structures like that for charity.
Correct. There's also a tax benefit. There's also a tax benefit when your donations are actually taxed, but you get a tax benefit for it. But that's
so
not
you get to create impact. Yes, you create impact.
Yes, but the government also appreciates what you're doing.
Okay. Yeah. Appreciates
because you're taking away money that you have done something else, but you've decided to drive it towards. The philanthropy comes from the fact that deep down human beings are altruistic. We want to give, and we feel nice when we give. Correct. Yeah. But you need to do it the right way.
I think 55 is 50 and above is the age of looking at money differently.
That's true.
I once had a session to sit down with Jimmy, and one of the best sessions I've had. One of the best.
Jimmy G.
Yes. Yeah. Wanjigi. And he says, I asked him, what does he benefit from what he's doing now? No, I think he started explaining, he doesn't need money.
Yes.
There's nothing that he's doing now for money, and he's more careful. He's more interested in impact.
Yes.
Na ako tu kwa hiyo age bracket 60. Yes. Mira kwanza, when he gets comfortable.
Oh no, me I need money right now. I mean, let's get it out.
Kwanza there's something he said. There's proposals za do. Yes. At 10 million. What is 10 million? CG 16 million. For him, he says like vitu nafanya ni za impact.
He's
so I think there's an age where money stops to matter.
Yes.
It's either an age or an experience. Because when you say now you live on 10% of what you used to earn,
Yes.
and if someone told you that you could actually survive on 10% of what you're earning then,
Yes.
you would have laughed
Oh my
in their
goodness,
face.
I would have thought, are you crazy?
But then again, if you had lived on 10%, you would be, okay, 100, okay, over 90%, you would have.
Oh yeah, that's true. But there's something I've said thrice, and it's a philosophy. You need to live. You need to enjoy life. Do not. Something we used to say. I don't know whether it's true. We used to say that that there are very wealthy people in Kiambu who drive pickup Nissan 1200. If it still exists.
Yes.
Right?
Yes.
And then that man,
Owns the
owns
city.
everything.
Yes.
And they go.
Yes.
And guess what? Second generation comes in,
Wipes it out.
them. You also need to live. And that's the reason why I took my passions and I've enjoyed living my passions also. So it's a balance. You have to have a balance.
But they are probably that rich because of that driving the Nissan Datsun. One of the richest
But I don't
men
want
in
to
the
be.
world.
I don't want to be known as a rich person.
The
I want to be known as an authentic person who enjoys his life also.
Kama Warren Buffett still lives in the house he used to live in Leo Kitambo.
Correct.
See, labda that frugality is how you get to that money.
It's possible, but there are also people who I admire, who I find they have not made as much money, but they have made impact and they've enjoyed life. My issue is not that. Warren Buffett lives in a quality house, right? For example, if I built my first house in Mountain View, right? Did I need to go buy land and build a house in Karen? If you think about it, how much land does a human being need?
Good question.
6, like a plot of 6 by 6. Pali utazikwa, me have cremated. That's all the land you need.
And there are people with hundreds of thousands of acres.
And chasing more. So you're right. In your 50s, you try and think about such things. Okay? And I've gone through a phase of my life where I'm building and I'm selling.
Yes.
Exactly.
You're building and you're
building
selling.
and you're selling.
Yes.
And you have to allow yourself that kind of life. So yes, as I said, I've enjoyed my life. I can never look back and say I did. And I've enjoyed also the change I've made in people. And the change I've made in institutions. Like if someone comes and tells me you spent millions on rugby, yes, I love the sport and I did. You spent millions on horses, yes, I love the animals, I did. But did I deny anybody anything at that particular time? No. Did I take away money that belonged to someone else to do those things? No, I did not. Now, there's someone who could say, but if you had put that money, in your 60s, you'll be doing very well. Can I be ride those horses when I'm in my 60s? Yeah. Like, for example, I have countries. Recently, I feel some countries calling me Estonia, Latvia, that area I've never been. And I want to go. And I need to make sure I work a bit harder so that I can go. This is the issue of Kenya, tunaenda America, Dubai, South Africa.
Yes.
There are other nations I want to see. Will I have time to immerse myself in their culture? Maybe not, but I want to go. You get
There's an island that you shouldn't go to.
Which one?
Yo ukienda you'll go back to Dagoretti.
Which one is that?
Inaitwa nini? Sijui kama iko it's a place in Madagascar where billionaires, like it's a billionaires nini island.
Yes.
I forget the name. Niliona juzi.
I am that's not it. I just find that issue of chasing millionaire titles. I went through that process. There was a headline in the paper. You go back to Business Daily,
yes.
2017, meet Nairobi's latest billionaire. Gives you more problems.
More pressure.
The problems. I'm telling you problems. Kazini wako, uko, atakuja. And also, everything you do, you are judged by money. It's such a weird life. That why is it like that? Yeah. There was a time now wasted jeans came, and of course you want to dress with the time. There's a guy on Facebook when I was on Facebook who wrote to me and said, You have all that money and you're wearing torn trousers. I told him, that just says where your brain is at this particular moment. So, and then you're right. When we are older, that wisdom is there. When I'm talking to 25, 28-year-olds, they want to live the life I live. They want to drive the kind of car I drive. They want to live in the kind of house that I live in. But these things don't come that easy. You will have to do something weird to be 26, 27 and live that kind of life.
You have to do something weird.
Wash, steal. Money comes out of time and resilience. That's how you build wealth. You remember me mentioning, check Forbes' list of billionaires. People below 40 who are billionaires. There are very, very few who made it. A lot of them have inherited.
You cannot be a billionaire and
a dollar billionaire. No, you can. I didn't say you can't.
No, without inheriting. Until you have.
No, they are.
No,
they are. King Zuckerberg.
Yes.
But they are unicorns. Wealth is it comes out of a process of of time, as fast time, and then resilience. Utakapitia. They are there. Of course, in every place in the world, you will find even at 20. Yeah. I mean, what is this young girl who became a billionaire out of a makeup line?
Rihanna.
Fenty. Yeah, there's Fenty. There's Rihanna. There's also one of these girls.
Kardashian.
One of the Kardashians.
Yeah, one of the Kardashians.
Why do we know? Because he's a unicorn. There are not very many.
In fact, one of my favorite podcasters from South Africa.
Yes.
And it was Penuel the Black Pen.
I don't know.
I've seen a clip of him where he says that the chances of becoming a dollar millionaire in South Africa is 0.08%.
I can't believe. A dollar
millionaire.
Yes. That your net worth is 130 million Kenya shillings. That's a dollar millionaire, you know that?
Yes.
Even here in Kenya, on proper, not illegal, okay, and not political, there are very few people. However, if you look at them, they are not 22 or 23 or 30.
Time.
I encourage people, time. I remember one time, I went to the bank and I took a loan to buy a brand new car, a red BMW. And anyone who knows me, like I drive red cars.
Yes.
And not the current one, I have another one.
Yes.
So that museum, kaniambia Nduati, when we are driving home kwa hizi streets, mnatusukuma tu, watu wanatusukuma na gari za higher purchase.
Yes.
Okay. And hiyo gari sasa ukigongwa hapo itabidi saa bank itakuja kuchukua. And it's something that he was telling us, I tell young people, do not rush to buy liability, to get into a liability we go to a bank to borrow for a car. That time the guy was driving a 7 Series BMW. And I knew the car. I felt really attacked, Bana, because my repayment was 400 Gs, Bana, for that, the car that I was driving.
400 Gs.
Yeah. So you see, he was older. Okay. Now, I can tell people that.
But you had to experience that.
I had to experience. Would I go back right now? In fact, since then, I don't think I've ever bought a new car.
But would you fork out your money instead of paying 400 Gs plus the interest and the insurance you're paying on that PSO jokes?
Yes.
Would you just buy it in cash? So
I have, since then I bought cars in cash. Yeah, but not brand new.
But I've also changed perspectives in terms of buying brand new cars in Kenya because I noticed that when you buy the so-called brand new, unajua wewe ukisema brand new cars unasema kwa showroom, but the so-called brand new cars, the mtumba cars,
Yes.
I noticed that, let's say for example, they sell you a car at 3 million, probably the buying price of that car in Japan is $1 million, 1.2.
Right.
Then they tax you on the 1.2.
Right.
There's a first tax.
Correct.
Right? Brings it to around 1.8, 2 million, probably 2.2. Then the next tax, they tax you on 2.2 million.
Correct.
Not the actual price of the car.
Your
So you actually
your
throw away
VAT,
money.
yes, yeah. It is, and you have to go through it, as I told you. Everyone has to go through this journey, and I went through it. So people asking me, why don't you let me go through that also?
Yes.
And I tell them, but that's the reason. That's what's called wisdom. Learn from us.
Yes.
Yeah, there's those sort of mistakes. That I tell you something. If you import a 3-year-old car from Japan,
Yes.
okay, registered, manufactured 3 or 4 years ago,
Yes.
right? Let's say in the UK, even in UK roads, it's like a brand new car here.
Yes.
Yeah, you understand? Because maybe it was on a lease hire for a company, and then they've upgraded every 3 years. Then you buy it here. That car you may find you go to a showroom, it's 20 million, but you get it for 7 million. You understand? I'm just giving numbers.
Yes.
So it's an issue of learning. There are some who will learn, there are some who will not. But it comes again from wisdom.
Okay.
Do not just chase money for the sake of money.
Sasa, now tell us about your event.
Yeah.
Alafu tumalizie kama the difference between good money and bad money. You have answered this on different levels.
Right.
But sasa, now in summary, first of all, tell us about your event.
Yeah. So on the 28th of June, Предприниматель Consulting, we have an event called the Currency of Change. And it's a topic that we selected deliberately. We're talking to entrepreneurs and people interested in entrepreneurship, so people like who just graduated, okay? I'm one of the keynote speakers. Ngugush is one of the keynote speakers. He's coming to talk about the creative, the gig economy.
Good choice.
Yeah. Dr. Wanjiro Rutenberg Kamau, she's coming to talk about philanthropy and the non-profit space as a career. Terian Chebet is coming to talk about the media space.
Huyo kwanza mali alisomea
So those are people need to do. And then we have a panel. In the panel we have Sam Kongo, who is my mentee and is the CEO of Social Meds. Sam has built a beautiful digital agency. We have Ramanyang. Ramanyang is also my mentee, and he's going to be the moderator. And we expect also nuggets. A lady called B. Matthew, a friend of mine. She's a coach, lifestyle coach, but I like how she has gone post corporate.
Wow.
Yeah, and then we have the CEO of Youth Plus.
Ticket is not 2 million.
The ticket is imagine it's on MOOC. The ticket is 2,000 bob.
No, for real?
For real, 2,000 bob.
Ticket is on MOOC.
Is on MOOC. You can go to MOOC and buy it. It's 2,000 bob. The currency of change.
Yeah, we have a link to the event, direct buying ticket. You can get your ticket directly kwa link ya hii video. Actually, 2,000 bob. 2,000 bob. Okay.
It's also using my network to give back.
Yes.
Correct.
Yes. Okay. Sawa. Thank you.
28th of June at Quare Catholic University.
Catholic University.
Yes.
Yeah, wase mshow up bana.
Yes.
Mshow up. Link ya kubuy ticket iko hapa down. Very powerful lineup of guests.
Yes, yeah.
28th of June. Which day of the week?
To be a Saturday.
It's a Saturday.
It's a Saturday, yes.
Okay. Wadau, hata watu wetu tukutane huko. Hata mimi nataka kufika
from 10 a.m. you leave there by 2.
From 10 a.m.
Yeah, then we have vendors, and we're also looking for other vendors who are interested in coming in to showcase their products.
Okay. Is there a contact number they can reach out to where people interested in vending?
Yes,
for the
0700
0700
11
22
44.
44.
Yeah.
Our producer, we keep here, we make sure that number is running on the screen. If you're interested in showcasing your product, vending kwa your event, your Currencies of Change, 28th June 2025, please reach out. To get your ticket, link iko hapa down. Number pia to get in touch for more inquiries, I believe. Ndio hii hapa, si ndio?
Correct.
Good money and bad money.
Okay.
Yes.
It's a very hard question.
Because I asked one of my team members,
Yes.
Milka Leo, ati you mentioned Women's Guild actually. I'm sure she's written that in her notes.
Yes.
She's upcoming Women's Guild, like Gen Z Women's Guild,
Gen
if
Z
you can
Women's
say
Guild.
that. So
Yes.
she believes in Jesus before he was 22. So now, when you look at like her, nikamuliza swali, like if you were to be given money
Yes.
by a politician for something you have done justly, umemfanyia job,
Yes.
then amekulipa,
Yes.
but this money they've stolen from someone.
Yes.
Is that good money or bad money?
Okay.
As in where money comes from.
The source of the money
Yes.
is the service you've given the person genuine. Is it good?
Yes.
Right. Then that's okay.
So what are politicians tithing in church from proceeds of crime? That is good vibes.
This is where I have a problem, right? Yes. Where this person is known to be corrupt, right? And comes and donates money.
Yes.
Okay. Comes and donates money into your church. And you already know. Okay. So first of all, did I tell you that there's a tax benefit of giving money?
Giving money.
Most of those people who give money on camera is because there's a tax benefit.
So when someone sends me a message, nitumie 5,000 urgently, I need to register that.
It's a donation. If it's a donation, it's tax deductible.
Oh Lord, thank you for telling me that before filing returns.
Yes. Okay, but you can't have $1 million and say I've given $1 million. Okay, that's one. Second, the easiest way to clean money is that. So I come and give you money, right?
Yes.
See, it's a donation, it's cash. Nobody questions where that money come from, right?
Yes.
But then I can give you $1 million, but then you keep 200,000 and you give me 800,000, and I can put that money in the bank.
First, there's something you've said, and I know people will have a field day with this.
Yes.
If someone gives you money on camera, they can claim taxes on that.
Yes, when they're doing their taxes, a donation is tax deductible.
Okay.
But you're not donating, it's not Peter Nduati giving to taking or
Yes.
you're donating to a structure,
Oh,
a church, an event,
yes.
okay, and things of that nature.
Yes.
It is actually tax deductible.
Okay.
Yeah, donation, not all of it. Part you need to consult your tax consultant. So that the person who asked you that question, the answer is yes. Whenever you're selling a service, you do not question where the source of money is, right? So it's not bad money. And that's why also you can take that money and say, I was paid by that politician, and your bank will accept it. You know, banks also check PEPs, politically exposed persons. Yeah. In fact, not even that, even investors. If I came to invest in your business, say I've raised money from other funds, if you have a person in your business who is a PEP, would tell you, first of all, remove them from the business. Politically exposed persons. And it's something in the investment world, around the world, that makes people uncomfortable.
Okay.
Yeah, because remember, corruption is not created in Kenya. It's around the world. When you say in places in the US, lobbying is a form of corruption.
Yes.
What
Just
Elon Musk was doing, giving 280 million to Trump. It's an example of that level of corruption, just a bit more sophisticated.
Okay.
Yeah. So there's clean money and dirty money. Maybe that's what you should have asked, not good or bad. Yeah. So, and dirty money is around us, and especially right now.
Oh, in fact, I think I read somewhere that if corruption money was to be removed from economies or drug money and stuff, some economies will be crippled.
Of course, liquidity.
Okay.
It is possible. One of the reasons why we are struggling with liquidity right now is because corruption money is being hidden out of the country.
I've had that.
And for that reason, that's why I wish they would steal and put it in Kenyan investment, because then it will help liquidity. It is said. But so that's what I normally think. That's what happens. That's why we're struggling with liquidity.
So, unajua, when I look at this conversation was mainly to anchor on corporate structures, but you're so interesting to listen to that. I know. I've just opened this now.
Oh, those are your notes?
Yes. I've just opened this now.
Invite me another.
If I just touch any more thing, najua will go na tutaendelea. So please, if your schedule allows, I know they have already classified you as a friend of the show.
Yes.
Please.
I'll definitely. And thanks for having me. This
Asante.
is the journey I am on. And thanks for inviting me. You know, I'm sure when you wrote to me, you didn't think it was me who was going to respond.
Because I had called my friend. Rufus.
And he called me.
Oh, Rufus. I called Rufus and I called Waithaka. From Centonomy.
Yes.
So Rufus, I think Rufus is very busy.
No, Waithaka is the one who reached out for me, sorry.
Yes, Waithaka
called me.
And as I was waiting, because I called Rufus twice, alikuwa ameshikana, because I watched the full episode on
Financially Incorrect or Founders?
Financially Incorrect. I watched it. Okay, Founders, I'm watching.
You're watching it now. It's a long one. It's 2.5 hours.
Yes. I'm watching those in installments. There's many episodes. Financially Incorrect, word for word.
Yes.
Like, I've watched you on Centonomy from 10 years ago, and there are things you said there hata sitaki kuguza, because I just know that it's a whole new conversation. Yeah, so
happy to come back.
That's good.
I'm happy to come back as long as remember I mentioned the word impact.
Yes,
that's what I'm doing.
Good vibe. So now, wadau, if there's anything you feel I've missed ama zenye tujasema, something you feel that Mr. Peter Nduati will be best placed to discuss, tuandikia hapa kwa comment section. We'll pick that up in our next episode. Thank you, sir.
Nashukuru.